Hey everyone, and welcome back to a quick portfolio update for you. So in the last week, the cash investing portfolio was down 0.72%, whereas the S&P 500 was up 0.4%. Year to date, the portfolio is still down 6.33%, whereas the S&P 500 is down 3.97%. As for the whole performance, so since the start of the portfolio, we're still up 49.54%, whereas the S&P 500 is up only 13.3%. Of course, this performance right here was Friday. Friday was a pretty good day for the stock market and specifically some of the stocks that I own in the portfolio. Overall, this is the overall total returns for each and every position. We're going to talk about that in just a second. Now, as you know, the markets in the last couple of weeks were extremely volatile. Whether it's inflation worries, no rate cuts, yes rate cuts, interest rates are coming down, maybe not, maybe it will take longer than expected, tariffs, macro conditions, so lots of uncertainties even with some earnings reports as well. But is it truly that bad? Because we're going to go over a couple of things that came out, especially from the University of Michigan, a couple of things that came out that to me, I'm sorry to say, made 0 sense. 0 sense. So let's start with that, and maybe actually let's start with the meme of the week. And so, meme of the week is this one: everything is computer. Of course, since nobody wants to send me a meme, then I have to create my own one. So I think this is a pretty funny one. If you know what it means, it's a pretty funny one. If not, ask in the comment section. I'm sure someone will help you out. Now, upcoming week, we have a couple of companies that are still going to report earnings. So most of them on Thursday. Before the market opens, we have Pinduoduo. And then after the market closes, pretty big one for me, which is Micron. And for some of you, it's Nike. And then on Friday, we've got Neo and Carnival as well. Of course, I'm going to focus on Pinduoduo before the market opens. And then Micron Thursday after the close. Hopefully we get a lot of information about HBM and all of that. I know that the quarter itself is not going to be the greatest one. So focus is definitely going to be on guidance. Nike, let's be honest, the turnaround story is going to take longer than expected. And that's not just me saying, that's the new CEO saying that as well. So if you think that you're suddenly going to see a huge increase in share price, I just don't see that happening just yet. As for Neo, we talked a little bit about Neo during the Tesla weekly video, talking about the delivery and production numbers, especially delivery numbers. They did beat their own guidance, a small bit of the bottom line. So we'll see what happens, but that's basically it for next week. Then, if you've been following me, especially during the live streams, you know that I've mentioned this already. So the mega cap tech stocks trade at their lowest valuation premium to the rest of the S&P 500 since 2017. So if we look at the Magnificent 7 forward PE, I mean, either they're going out of business, they're frauds, and there's no growth left, or the market is drunk and the market is overreacting yet again. Yes, we have overreactions on the upside. We can definitely have overreactions on the downside, because are they worse companies today than they were in 2017? I don't think so. Another interesting thing here, and again, just because it happened before doesn't mean it's going to happen again, but it is quite interesting. So stocks have bottomed on March 12th the past 20 years. So we see here the average year for the S&P 500 the past 20 years. And well, March 12th was of course a couple of days ago. And since then, we've gone up. So are we going to see the same thing happen again? Maybe, maybe not. And then the picture that you're probably seeing on the thumbnail. This is the University of Michigan expected change in business condition in a year. As you can see, we are at the lowest point ever. Let me repeat it. We're at the lowest point ever, which means some of the people that they surveyed here think that today the current environment is worse than when we have a pandemic, is worse than when interest rates are going up, when inflation is going up, is worse than the great financial crisis, worse than 9/11, worse than the Cuban Missile Crisis. I mean, when I see this, I'm like, you know what? Give me a break. Like, What kind of ridiculous idiocy is this? Like, this does not make any sense. And we've talked about that in previous videos when going over some comments that Tom Lee made. And he said, look, if you look at the University of Michigan, their surveys are left-leaning, or you could say Democrat-leaning, which means that a couple of months ago, well, you would have gotten way more positive results, and that's exactly what you got. And today you're getting way more negative results. As for other surveys, if you look at heavy Republican surveys, you're seeing a bit of the same thing, less extreme though. So again, when I see this and this makes headlines, I'm like, okay, thank you, fake numbers. But what are not fake numbers is this, egg prices. So apparently that's a big thing. And I said last week, and someone said, oh, more chickens do not mean more eggs. I'm like, yes, if you kill millions of chickens because of the bird flu, then you're shortage of chickens, which means you have less eggs. So yes, it does make sense. More chickens, more eggs. Same like housing. More builders, more houses, more people can afford a house because the supply is bigger and the price comes down because that's how the market works. But okay, fine. Anyways, prices for eggs have come down quite drastically in the last couple of weeks, and prices of orange juice as well, down more than 50%, which I didn't know this was a thing, if we're being honest. So yeah, apparently this was very expensive, but not anymore. Not anymore. Well, it's definitely cheaper than before. And the last thing is about inflation, or should I say trueflation. Because if you look at the Bureau of Labor Statistics, they basically calculate inflation using outdated metrics. Trueflation, they say they're using metrics that basically portray reality and show and look at real-time data instead of outdated data and data that really, let's be honest, we're in 2025 here, maybe update your systems to actually provide us with useful information. Apparently, BLS, which is the Bureau of Labor Statistics, spent $1 billion on that program. $1 billion on a program that shows us outdated data. I just don't see how that makes sense. And as you can see on the screen, trueflation shows us that, well, inflation is coming down and coming down quite rapidly. Now you might say, yeah, but prices are still going up. Yes, because we're not experiencing deflation. Prices are going up. We are still having inflation, but we have less inflation than previously. If you want prices to come down, yeah, that's what's happening in China at the moment. We have deflation. Could deflation happen? It could definitely happen, but I'm not really planning on that anytime soon. So yeah, I know I sound extremely positive or like a perma bull here, but to me, if I look at the data provided to me, all of them, and then I aggregate it, yeah, it's not the end of the world. And I know you're going to say, oh, what about a recession? A recession is 2 consecutive quarters of negative GDP growth. Now, yes, we've got the Atlanta Now figures that we've seen, and that was negative. But that was negative because in that formula, you have to calculate imports. Well, imports has a negative impact on that. And see, we've had a huge increase of imports because, well, you wanted to fight that tariff. So you basically imported before the tariffs hit. Yes, that impacts that number. Again, recession, 2 consecutive quarters, which means 6 months. Let's see what happens in the next 6 months. Also, that was something that I showed you last week. The market bottoms before a recession ends. So if we are already in a recession, the markets have usually bottomed before a recession ends. Just so we're clear. Okay? So, yeah. Markets right now, uncertainty up and down, up and down. I think a lot of it is overblown, because if some of you think that we are now in a worse situation than in 08 or in 01 or in 2020, then I'm sorry to say, but delusional. Anyways, moving on to the portfolio. So again, not much has changed. Actually, I don't think that anything has changed over the past week when you look at the rankings. So it's still SoFi, PayPal, Alphabet, Alibaba, Intel. Intel, of course, did help the portfolio quite a lot this week because of the new CEO announcements and the stock basically being up 15%. It's actually up 17% year to date, Intel, so definitely helping the overall portfolio. Same with Alibaba, but I'm still down on Intel, just 2.5%. Micron, number 6, back at $100. Uber, number 7. Then we've got Tesla, Rocket Lab, AMD. AMD, I'm making my way towards the 100 shares that I want. I think I'm 6 shares short, so we're getting there. Meta, the local, Walt Disney, back under $100. Upsellera, Celsius Outlet, and then, yes, I ran out of cash. Now, I am going to increase my cash position. Well, I'm going to inject more cash 2 weeks from now, because I can't inject more right now. I'll have to wait 2 weeks. Okay, we'll see what happens with the market in the next 2 weeks. If nothing happens, if things go up, fine, it's fine as well. I just want to have some extra cash just to make sure. So I'll have to wait 2 weeks. That's fine, because I did buy more Meta. Well, I increased that position by 25%, which is basically just 3 extra shares at $591.8. Yes, I said if it drops under 600, I think I'll buy, and I did just that. And I added another 11 shares, or an increase of 13.25% to my AMD position at $97.28. All the rest were moves that you've seen a week ago. So yeah, all in all, that's that. Yes, Nebius did drop back under $30. It actually went back to the levels that we have not seen since the DeepSeek crash. So if you're interested in an update on Nebius, do let me know in the comment section below. As for the rest here on the watch list, Nu is holding up okay. Elf is back under $70. Lyft is still struggling a little bit. Duolingo, still an amazing company. Vikings, what else? No, nothing really crazy. Oh yeah, Novo Nordisk did take a hit. It's now at $77 yet again. So if you want to update on that, do let me know as well. But all in all, I mean, I am, of course, not happy that I'm down 6.3% year to date, but we're still only in March. I think even this year, I think my portfolio will outperform. And in the future, I am definitely sure that it will outperform, unless there's something crazy that's going to happen. But no, I'm happy with the stocks that I own. Eventually, maybe I will trim some positions, probably the low hanging fruits here, and concentrate on the top dogs of the portfolio. Maybe just increase even AMD more and more. But so far, that's about it. We'll have to wait until the next cash injection to see if I'm planning on making moves, and maybe I might take profits from Alibaba, although with the recent news that the Chinese government might actually stimulate the economy because, well, they're suffering there. So that could definitely help a company like Alibaba. So yeah, right now, very happy. I mean, very happy. Could be happier if the portfolio as a whole was up year to date, but all in all, still being up close to 50% since we started that portfolio, outperforming the market quite comfortably. I cannot complain, right? I can complain, but I rather not. Or maybe just in private, maybe. But yeah, all in all, next week, only looking at Micron, Pinduoduo, Nike, and then maybe NIO on Friday. Micron, I think, is going to be very important. Oh, by the way, on Tuesday, of course, GTC event throughout the week, but on Tuesday we have the keynote from Jensen. So whatever he mentions there, talking maybe a bit more about robotics and the Cosmos platform, especially for AI robotics, AI agents, and all of that, I think that could be very, very interesting. We are going to do a live stream with Jose. So the usual Tuesday and Thursday live stream, the usual one on Tuesday will start the same time, or maybe a bit earlier. And then we're just going to stay live throughout the whole keynote. So make sure you join us during that live stream. We're, of course, going to provide more commentary towards the end of it. So yeah, very exciting week, very important. Maybe that might be the sentiment shift that's going to happen, especially in the tech space. Remains to be seen. But yeah, all in all, I don't think that the sky is falling. I don't think that the recession is the end of the world. There's no pandemic. There's no great financial crisis. No, I also don't think that we're going into a 2022 bear market, because valuation-wise, we are far from being in a bubble, believe it or not. Some stocks, yes, some stocks are maybe in a bubble. The private sector, AI related, as you know, I think is in a bubble. The public one, I don't think so. If you can buy an Nvidia or a Meta or whatever in the low 20s forward PE, I really don't buy we are in a bubble scenario. So yeah, don't stress, invest. Another idea for a cool shirt, I think. Anyways, that's all I've got for you right now. Do share your thoughts down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.